Hey everyone, good afternoon. Okay, let's get to this pretty quickly just so that we can at least have an idea of where we have to open in order for us to have some better odds this week. Okay, so I hope you guys all had a good weekend, first and foremost. Hi. Okay, let's take a quick look. Okay, this is pretty laid out. Obviously our 60, 79, 81 held. They retraced 7106, 7110. They closed 7132. They opened 7143. They stalled 61. These are all part of the conditions. Read that report I put out. That kind of goes over the actual ranges. I know on Friday I manually showed you guys how to calculate these, and I will include them in the report. I just want to kind of make it look a little bit better. But looking at this now, do you see how they kept the week within this range, you guys? Like it's pretty insane when you're taking a look at this. Okay, so first and foremost, one thing that I think will help us this week, just for a very quick start, you guys, is if they give us the 128 point breaks. Okay, so I think opening above the 720304, like anywhere in the neutral spot, and that's specifically off this 7-8. If we do it off the actual low that occurred, it's going to be a little bit closer to 7207. So basically, long story short, I think for starters, opening in the neutral zone is obviously going to give us like better odds for the week. Okay, so 7207, 7208, these are also the 128, 132 point ranges that we had previously discussed. Closing at 71.95 was still good. Don't forget that these were the offset ranges that we discussed later in the week. So instead of having the 712225 closing points, we had these differentials that we got, which were roughly 21.75 points, right? And we applied these to the previous highs. So 21.75. I'm just giving you guys a really quick refresher so you guys know that's closer to 9475. Okay, off the actual prior highs that we had here. These were like the 10.5 point ratios, okay, or the 13.5 point range around 9.6. We also looked at these as the differential between the 3.2, so there's a 7.5 versus that 10.5. We also looked at the overall differential in range, which again, like I said, was between 18, 20, 20.75, 21.75. So if they open as flat, that's still not like the end of the world. Like that still could give us like somewhat of a decent break. Obviously opening in the neutral areas though makes the most sense for the best odds. Okay, everyone's in agreement. It's the 128 point range, 132 point range, the 20 point offsets. And I think when we looked at this, it was also on the core ratios off weekly open. Yes, it was. So that's the 103, 104, 107. Everyone's on the same page with why those areas are so calculated. So that would give us like obviously the best odds. They're not like the highest odds of that actually happening, but that's what would give us like somewhat decent odds. The minimum ratios that we looked at when we went and took off the pre-market high was at 7189.25, which was calculated on the report. Go back and read it from last week if you forgot why. That was a 256 point range. When we went and calculated these areas here, okay, off like 7181, 82, that's where there was a lot of overhead around 7200, 7201. Okay, so it made total sense that they stalled the 7200, 7201 area. Because again, and I will include these in the report, but I'm just trying to get through this as quick as I can. These are the 18 point ratios, okay? So 18 points made sense that they'd probably stall around this area here. So obviously opening around the 20, 21 points would give us the best odds, which net 7200s, okay? 7206, 0708, whatever. Where they initially had stalled was off the minimum ratio. So that was the differential between our 7122, 23, 24, and here. So that was like the 7.5, okay? So 7.5 points off here, okay? 10.5 points off here. If we looked at it off our 7185 prior all-time high, okay, 7.5 points was right around 7193, and then that 10 point ratio was right at 719575. So pretty close to where we closed, okay? Do you see the correlation between 93, 95? So that isn't terrible. It just means that they could maybe re-engage the 71 32 area. Does that make sense? Like that area could come back and get re-engaged. Whereas if they open us above these areas here, it would try its best to avoid 7144 support. Does that make sense? Because then you're hitting at the higher ratios. So for starters this week, I think opening minimum 7188 and 93, obviously, right? But if they open us flat in there, that's not the end of the world. They could still keep upside zones in play. They would just have to trigger 720708 pretty early in the week, specifically ahead of the 28th. Is everyone on the same page? You do not want to not trigger the 72070608 ahead of the 28th. I think that then would be an issue of not seeing like any zone expansions or continuation, and that is what could suffice like a bear zone stall. So minimum is around the 7188, 7190, 92, 93. Ideally over 95 would be best, like for like the minimum conditions to come into play. 7200 is okay, and then best case scenario is the 0305, 067 plus. So we'll see where they open us. I didn't really think that they would open in a big range this weekend. Like I didn't think that we would have a gap up or a gap down, because these are extremely calculated spots. Does that make sense? And we opened above 88 and 93. Had we had we closed beneath, let's say 8893, then I would think, okay, there's a tiny probability that they could gap us down, okay? So I was expecting a relatively flat open. 7185. So this could for sure put us in a back test scenario like we talked about, back to like the 714443 for the week. Not too much of a gap down though. That's still okay as long as they immediately retrace. I think like the first minute stick would have to try re-triggering the 8893 area to at least kind of reduce that volatility a little bit. And that makes sense because the 85 areas are linked to what? So if you're opening around 85, that's a core area, right? And beneath 8893 goes back to these minimum ratios closer to like the 22, 25, 28, okay? Does that mean that we could be at some risk this week of maybe, and I'll show you what I mean by this. You see the 10-point differential right here between our 7122 spot and this area here, like the 10.5 range. If you subtract that from, let's say, the Friday close, so here, which was here. Where did we close Friday? Points. It's going to be around 71.8550. Does that make sense? It's basically if they do the same thing on the downside, which is that 7.5 to 10 point differential, okay, then it would take you back to core. That is what could trigger what, you guys? I'll let you guys answer this, and then I'm going to end the stream because I really want to finish this as early as I can because I've been at my desk for like 5 hours now. What could this imply? This kind of an open here. So they opened it 10, that within that 10-point differential that's more closely aligned, hint, 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 to the 21st close, hint, hint, the 21st is linked to the 28th, okay, of 7122. What could this imply if they don't retract range? Yeah, this could be a core-to-core move, right? So core-to-core would be potentially, if they clearly can't come back and trigger back above these ranges in here, that's what would offset, then they could trigger, well, the lowest core move like would be like to the 70s, like maybe the 76, 74, 71, right? But that's what could trigger a break back down to the 20s. We are at a tiny bit of a disadvantage this week because of one specific thing that happened. It wasn't the worst case scenario, but it still did occur. The reason why it's not the worst case scenario, it is recorded. I have it recorded on here and on the Discord. This isn't the worst case scenario because they at least held core. So, okay, we held 70, 78, 70, 81 on the 7th bar. Okay, this is good. What we didn't do is we failed to trigger 71.88 on the 7th bar. Okay, this is what could still trigger some range and volatility on the 8th bar here between the 24th and 28th, because even though they held, they didn't trigger exactly on the 23rd. Like the 23rd would have given us the best odds, right? We all agree with that in terms of seeing continuation in range. And I think that makes sense because like that overall differential was about 19 points, and had they triggered us maybe 19 points higher, okay, this is like if they had a core hold and they broke 7188, do you see how that could have triggered a core break like above 7200 to 7220? Do you guys see that? So, and that would have obviously given you the best odds because you're opening neutral and you're ending the week at core. Does that make sense? And you're ending that 7th bar at a core range. So I think that could have given us the better odds in the week. So that's the only like main disadvantage that I noticed this past week, was mainly the fact that they triggered 88 on the 24th, which it's not the worst case because we still have like odds from the 24th through the 28th, but obviously hitting that range before the flip on the 7th bar would have been the best case scenario. Does that make sense to you guys or no? Just quickly answer that too. Don't give me like no responses. That'll honestly piss me off right now. Does that make sense from like a timing perspective in terms of like time and price? So 1, 2, 3, 4, 5, 6, 7. Yes. Okay. So it's not the end of the world. It doesn't mean that you can't continue from the 24th until month end or until mid quarter. It just means that there could be a bit of a volatility wall that you're triggering there, or some reduction in range. Okay. We never really had the cleanest core breaks anyway, right? Like on these bars, like they hit core here, but then they closed the means, right? They open at the zone, they close 60s, right? Like this whole move, even though they've been hitting core highs, okay, they finally hit a core ratio here at the 69.20s, okay, on the 3rd to 4th bar. This is what triggered that 4th bar expansion. And then they stalled 70.58, which is mid-core. 70.71, 76, 78 would have been better, right? But then that was okay because they proceeded to sustain those ranges on the 13th, 14th, 15th, 16th, right? Do you see what I'm saying? So even though like the 70, 78 close, I think, on the 14th and the open on the 16th, I think that is where this differential came from. Does that make sense to you guys or no? So I think that the whole reason that happened and occurred in the first place, and why we didn't trigger 71.88 or 70 to push to 70.20s, 71.20s on the 23rd, is I think that was mainly here. I think it was when they started reducing the range just slightly, and it's not much, but do you see this? 20 points, 20 points. Do you guys see that? 19 points. I know it's kind of hard to see because I have all this other writing on here, but, and let me maybe delete these so it's a bit easier, but do you see where that is likely where that started from in the first place? Hopefully you guys can see that. Let me just remove all these alerts that I have set here too. Does that make sense? Like in terms of where that probably started anyway, like that whole theme, and probably why they really had to offset it on the 24th. So this is where it was offset, when here they gave us this here, okay? Do you see it? This is where it was reduced a little bit, okay? From here, this 19 to 20 point differential. Okay, and I noticed that that ended up being the case here, and specifically to where they started stalling here. Okay, so do you see that? Look at the differential and where they stalled. So basically, had you closed here, let me draw this, back in here, okay, had they closed maybe closer to here, like this, okay, you probably could have had the same thing happen on each end. So you could have maybe had a 19-point break right here, okay, so maybe you could have had some closing points closer to like 8.4, 8.1, 7.8. You might have had even like a 19-point break back here. You could have maybe triggered 72.02, 03, 05 on that first. Do you see what I'm saying, you guys? This is where you could have triggered neutral. And then this is also where maybe from there you could have had a 19-point break to the 72.1975, basically like to a potential core area or core range. So I did notice that that is part of the theme. It's not the worst case. I just think it could increase some volatility or put us in a bit of a reset window or something like that. And mainly because 8th bars are pretty similar, I would say, to like the way that 5th bars react. So kind of like how the 16th through 20th period reacted. And obviously between the 16th, 17th, 20th, we kind of went sideways up inside range, right? So we could maybe see some of the same price action happen this week and maybe re-engage these 71.20s. Like that could be a pretty high odd if they don't keep this inside and maybe sustain like the 7166, 71, which I mean, like starting off right here, we're already at a disadvantage because they might want to re-trigger those core ranges, right? So I think it makes it pretty easy. The only time volatility would increase, think about it, this week, if we need a core reset, okay? Last week we opened neutral, correct? So we closed 750s. That's like mid-core, it's okay. Then we got the 70, 78, that's great, but then we didn't get the full continuation above core ranges on the 17th, correct? That's what caused us to go inside sideways between the 20th through 22nd. 24th, 24th opened up the window again. Obviously, if you re-trigger and fail 71.20s, 71.30s this time, you're going to re-trigger what? 70, 78, 70, 81, correct? So we won't take away that potential probability, but I don't think it's super high. I feel like they could just kind of keep it stuck early on and then maybe reflag us on the 28th, kind of relative to where they hold tonight on the 27th. That could just turn into a bit of a flag. The downside scenario would be if they wanted to try resetting this. Okay, so just listen closely. If they really wanted to try resetting this, which sometimes for an imbalance that's happening, which there is a bit of an imbalance here. And this is just like a downside scenario, okay? It kind of depends on where they hold tonight. Like if they did take out the 20s and 70s and came back to rebalance the 50s, okay, don't think of that as extremely bearish. And this was on the report last week. Remember I said that there's still an odd they could hold 70 50s. Even if they broke 70 78, it doesn't mean that they can't hold that area. They could literally still take it to 70 50s and still hold, right? We talked about that before. Like there's still an odd that they could technically take it there and still end up holding. It doesn't necessarily mean that you fully trigger back to 69.20s or 69.80s. It just like there's still an odd that you can technically hold there, okay? And it's kind of relative to how the structure starts to form. Because they could still take it there and then still end up holding and bringing it right back around. So do you understand how that, if we had some sort of like a steeper downside move, that could just be the reset where they might want to try to repin it back above the 70, closer to 70, 81, 70, 78, 70, 88, like maybe like this. Okay, and what, in theory, what that does is it just resets this, okay, which is what could then bring it back for the proper resets of like 71.22, 44, 78, 74 versus the shitty pins back here at 6.4, 660 stall, 6.4, 6.3. Do you see what I'm saying? Because that was also an imbalance that was created here too. Like these, do you see that? The 18, 19 points? Do you guys see this or no? Like this is, I want to show you guys why this is a little bit complex, because even though we are triggering our spots, they're not proper core clearance breaks, okay? So like back in here, when we closed at where did we close that day? At 71.52 on the 20th. I was like, shit, I wish we would have closed at like 71.66 at least, or 71. Do you see why? There's the 19 point differential there too. And it happened quite a bit. So if they wanted to trigger that, and this could be a big reason why they never re-triggered 70.50s, by the way, if this ends up playing out this way, it could be to reset these, okay? And they then might want to properly reset 71.70, so like above 71, 52, 54, 58, 61, 64, basically those really crappy ranges that we didn't want to be in. And then that is what could give it the full clearance break to the 72.20s. Does that make sense? Like to these areas here, basically. Which we already discussed from the prior week why the 20s are important. So at least this gives you guys like one scenario to start the week, like for a downside scenario. Another scenario, like I said, is they could just keep this an inside day for the 27th and then maybe look to come back and retract range. The thing is the 27th is the final flip before the 28th. The 28th is a multi-flip. That's also our 10-day flip. Remember how we really wanted to push up this bar to prevent major volatility from occurring? So I think we did a great job there. That's why we don't want it coming back too low. Does that make sense? Because if it does, that could form a really nasty star. So from like a structural standpoint, do you see why it would be important that if we did test 70.50s, that they bounce off of there? Otherwise, you're going to form a really nasty star. Do you see that? At that point, you're better off going lower. You're better off going back beneath 69.20s, okay? And because otherwise you could form like a star reversal like this. So that's just to give you a structural standpoint from how this looks. Okay? So, which obviously, like, you don't want that. And then a lot of these, I'm just going to go over. 5 days also hitting its fourth bar. Okay, so this is the fourth bar, trying to decide on the 5 day, which is linked to the 31st. 6 days also in its fourth bar. Okay, a lot of these kind of like run from the 24th through early May. So on some frames, we're already in these periods. Even this on the 7 day, this flips on the 4th as well. So May 4th is pretty important. And then our 8 day also flips over on the 28th. The 8 day is kind of the scarier looking template because it's not as high as, this isn't as high as the, like it's not as wide as the 10 day. The 10 day looks less intimidating than this does. Okay, but on this, do you see how the 8 day, okay, which is linked to the 16th. So just keep this in mind. The 8 day is linked to the 16th. This is how to program your brains to time and price. Okay, 8 days linked to the 16th, which would be linked obviously to the 15th closing price, which is going to be linked to the 27th and 28th, correct? Do you see how that could engage or re-engage 70.50s? Because it's also linked to the point in time. It's not just like a price basis, okay? Do you see that avoiding this scenario on the 27th is why you'd probably want to hold 71.20s? From a structural perspective, do you guys see what I'm talking about? This is from looking at it from a structural view, which some people just understand structure and color theory more than they do words or math or whatever. But, okay, because that, if you form a star here, you definitely want to hold off the 71.20s and then bounce, correct? Because if you can't, then do you see why you're better off going back beneath here, maybe to 70.20s to make a, like a flag basically in here? Like this? Do you see what I'm saying, you guys? I'm giving you all the potential scenarios based on structure, time, and price. Okay? Because if they did something like this, we opened at core, so we have very high odds of core ranges occurring this week, okay? Here's where the 70.20s are. I'm just going to highlight the 69.70s in here too. And we have a lot of geopolitical risk, so anything is obviously possible. That's why I don't want to like completely like take away odds, but I think it's good to have like different scenarios too, right? Just in case, right? The safest bet would be them just kind of keeping it stuck like here, like not too, like basically what they're doing here. That's it being scared, because it doesn't want to go down too low, and it doesn't want to, you know, not go down low enough. Does that make sense? Based on a multiple structural flips on the 28th. Okay? And then on top of that, exactly, we have many catalysts this week. So there's reasons to drive price. I know we have, I think Japan has their rate decision. I think it's tomorrow. And then we have, Canada has our rate statement on Wednesday too, I think in the morning, and then the US has their rate announcement on Wednesday afternoon. So, and the interesting thing is, where are we almost always trading before a Fed release? Where do we almost always trade? Typically speaking. Usually in a zone or channel. Okay, so that's why this is going to be important to kind of see what they do around these core ratios, because the best zone obviously for continuation to be in would be obviously here, like 71.88 to 72.32, right? If they can't come to a concise decision, then they might want to take it back to the channel. That would be the 71.33 to 71.44, 71.49 scenario. Does that make sense? To kind of nest it there, and then could still eventually bring it back to 71.88, because if they reset 7144, that could just do the same thing where it could re-trigger 7171, 76. Does that make sense? And then it just kind of goes back in that same logic again. And then on the downside scenario, you could trigger the 7088 to 7132. So like maybe the core zones closer to like 7122, so on and so forth. And then your obvious downside scenario would be if you went 7022, 7032, 7044, 7048. Make sense? The intermediate area is right around our calculated spots at 7122, 32, 44. Along with like the upside areas near the channel and the new zone. So just make sure you're really paying attention to structure this week and how it starts forming. Okay? Because like think about this. Like so this here, all it really has to do is get back to around here, and that could still form like somewhat of like a structural flag, okay? But on the 10-day, and they both flip on the 28th, so the 27th closing price is super important. That would be a star reversal. Does that make sense to you guys or no? So you have to think about it from like a time theory. Okay, well, on this 8-day, that would be good, but on a 10-day, that's not that great. That would actually put us at some big risk. So you have to kind of start then factoring in what kind of time risk would you have from the 28th till May 8th, and then on this time frame till the 12th. Do you see what I'm saying? So then there would have to be some sort of breaks or negation periods that happen in between to kind of prevent that continued risk from occurring or something like that. Okay? And that could obviously be between the 28th and the 8th, and between the 8th and the 12th. So I would imagine that May 11th is going to be important anyway, and then likely the midpoint between these days. So like between the 28th and here, probably close to May 4th. And we already decided May 4th was important anyway because it's a multi-flip on those wider frames that we looked at, right? So do you see that? So May 4th is also a mid calculated flip off that 7-day, I think, that we looked at, that we were using previously. Yes. And then also here on that 3-day and on the 4-day. And then I can't remember if it was on the 6-day or not. Yeah, it was. Okay. So write down those specific dates. I think that May 4th is going to be very important based on how price trades today and tomorrow, and that's what could extend us through the 8th and 12th. And we have to really kind of pay attention to overall price sustainment. That's why maybe avoiding this entirely would be better. Or this would be like the case if they hold here but don't push, like let's say they get to 70-20s or 70-50s, but they don't push it all the way back up. You have to just keep in mind how this 10-day frame is going to look, okay? At that point, do you see how if they can't retrace that at that point you're better off like pushing back down to the 69-20s? Do you see how, I don't know if Katie's around, but like kind of to maybe net back flat? Because at least it gives you a reopened window between end of April into mid Q2. And we've been manually measuring off an 8.5-day interval, so I know the 28th is the flip date, but I am watching the 29th, because remember I did say that because it's an 8.5-day interval, the 29th is actually the alignment there instead of the 28th, because we're kind of this right here. And it's pretty funny because the 29th is Fed, is FOMC. So, and I had this, which I'll repost back in here. Okay, I hope this helps you guys in terms of just opening conditions to start the week. So right now with this kind of an open, obviously you want to try holding core ratios, so like 70-71, 70-74, 66, and then try pushing back over 7-8, 8-1 to maybe try getting back in the zone. I feel like getting back in the zone tonight and trying to retest the 72, 04, 05, 06, 07, that could help us reduce some volatility early on in the week. If they held tonight overnight, then we probably have the higher odds of the zone to channel bound ratios on the new contract. Does that make sense? And then from there, maybe if they push or stall, that's where this would be the bull scenario, by the way, if they keep this back into the previous zone where they could get like these areas as early as this week. Yeah, that's exactly what I'm saying. If they hold core overnight tonight and they get back into the zone and then align back to like, let's say 7208, 1420 pre-Fed or something like that, that could be the push that could trigger those 72, 71, 72, 78 areas on the week. 7258. Does that make sense? Yeah, honestly, guys, who cares? Like, it doesn't really matter. Like, if whatever scenario plays out, I think we have a pretty good handle based on where they open and where they hold. So, and when they retrace, too. So, obviously, if they can get back here 27th overnight, then I would think that those odds are higher. Plus, it's also the 8th bar. So, 8th bars they're usually not that volatile. I would say, like, maybe the 10th, 11th have a bit more volatility. So, 10th, 11th bars on this, in this case, are going to be, so 8, 9, 10, like closer to that May 4th to May 6th period. What do we have happening that week? Is there anything specific happening on the 4th? I think the 4th is a holiday. I don't know if the market's closed. I think it's a bank holiday, though. But like the 5th, 6th, because that would be those bars. I don't see anything specific, so would be crazy if they gave us some sort of catalyst. I know we have NFP on Friday the 8th, which 8, 9, 10, 11, like the 11th bar would be on the 6th and 8th, so I don't know if NFP would play a factor, but well, it's not the exact 4th, like the 4th through the 6th, but the 4th would be. So maybe sometimes when you don't have a catalyst that actually pushes price, I know it sounds crazy, but there's no reason to push price down and they're already in an upside trend, they just keep pushing it higher. Does that make sense? Like people always say, oh, you need volume to keep pushing, but that's not necessarily true. Sometimes having no, I've seen many market moves with little to no volume, right? But it's more about like what price they're being diverged from and like why they're breaking those specific points anyway. Okay. So, oh no, I deleted all this and then it put them back. That means I'm gonna have to re-delete these. Anyway, I don't know if you guys want these exact ratios here. Like I did send them. I don't know if do you guys need the exact math? That I already went over that on the Twitch stream on Friday, but like those are just the offsets between those 20, 18 point ratios that we kept talking about. I always like seeing too what the difference in gap was. So we already said that they're working with that 10 point range, which makes sense because that's the range that they roughly stalled, like 10.75. How much range are they holding? 13.5 points. Off the closing stick, they're holding around 11 points, I think, from where they closed that. Yes. So clearly there's some risk right here, okay? Based on that opening stick, open close. These areas also align with those core holds that we're talking about, like just the difference between open and highs is around 15 points right now. So there's some alignment around that 6, 7, 70. Do you guys see what I'm saying? So basically what we said with the core support, obviously if you start failing there, that's where they could start extending this downwards. I want to see what the 21, 22 point ranges are. They take it back to here. Remember how I said there's also this is still a chop zone between like this area to this area, still a chop area. So if they don't retrace overnight tonight, they could get it back to those choppy ranges, like in between the 50s, 60s, 40s. Make sense? And they may do that. That would be the only case where they don't keep this in a zone or channel to start the week, like in pre-Fed. If they wanted to just keep it stuck in an inside day to delay range until the 29th. Yeah, exactly. Okay, I'm going to get back and finish the report. Hopefully that was helpful for you guys. I tried making it kind of simplified, honestly, because I feel like when there's too much, you guys get so overwhelmed, and you guys even told me to try keeping it simple. So, I mean, it's already 2 pages long, but so it's really not that simple. But I did put out and obviously the conditions I wanted to record, so it's easier for me to put them in here, but I'll post the conditions in here. But it's kind of just a quick recap, okay? But I did put out that second report for you guys, so I think this is probably long enough. I don't know if you guys want all the visuals in there of all the different range. There are a few that I do want to put in here, which are kind of like the wider ratios, but I think it's important that you guys also remember like the spots that trigger like the bigger areas of resistance, which I think are going to be like, and I haven't even gone back to look at them, but maybe like our just our base ratios, like 3, 4, 6, let's say. Okay, I know they're not moving in exactly 3, 4, 6 ratios, but just to kind of use as like an understanding of like these support ranges. Do you see what I'm saying? Especially off like open close or something. Okay, so like around here. That's why I think these areas are important. Does that make sense? Like it's not that it has to be off that exact spot. I'm just saying like that would be important to kind of understand why that could trigger like the 70, 80s and what am I trying to say? The 70, 80s, and 50s could trigger volatility, but because this is moving in more of... Actually, wait. I should ask you guys. I shouldn't just tell you. What kind of ratios are we moving in right now? It's not 346 points and 246 points. It's something else. And I could tell based on the first day when they broke 214 points. 214 is 107 times 2, by the way. So those are core-to-core breaks, double core ratios, right? What's 214 times 2? And this is how I had an idea of what kind of range we could start moving in. What's 214 times 2? 428, right? What kind of ratios have we mostly been moving in? Especially when we're measuring off our flip dates. So the 31st through the 8th, through the 13th, 14th. 426, right? 413, we've talked about this. This is where I would say that like if they don't end up holding these specific ratios, like you see how like they stalled basically when we measure from here. Do you guys see this or no? Okay, that's why I'm just recapping this one last time because I've already gone over this 1,000 times. That's why getting those neutral spots, do you guys understand? Even though they're not core areas, it's what could keep those expansion ratios in play, okay? These 420, whatever, triggering 346 ratios are aligned. Just write this down on a piece of paper. 346 point ratios are aligned to 70 50s, 70 80s, okay? Which are aligned back to this March 31st low. Basically, open, close, and low. Whereas if you look at it kind of like this, I haven't actually done this yet, but I want to see. Oh, this is really cool, you guys. Wow. Okay, if we looked at the 426 point ratio, wow. So off closing range from the 31st, it's aligned to this low here at 6991. That's crazy. And then 214 points, which, like I said, is how they started this whole theme in the first place. Okay. Do you see that? 230, 214. 230 is what? This is how I knew that they were working in core ratios. 115 times 2 is what? 230. Those are max doubled core ratios. That's how you get expansion ratios over 346 points. Does that make sense? I feel like you guys don't understand that concept. So I'm telling you guys what it actually is. That's where it comes from. Okay? So they basically hit a max core ratio on this day. Okay? What they're doing right here, that's why I think getting a break on a closing break of like the 426 points here, which is where the 6,991,75,6,993 held. Okay, do you see how do I explain this in words? I don't know if you guys are going to understand this. This hold here was basically market saying we want to hold expansion ratios. Okay, 420 points. Does that make sense? So that's what we're trying to figure out right now, is if the market still wants to stay in an expansion scenario for up to 10 to 11 bars. Does that make sense? I don't know how else I can explain this. So the minimum ratio you'd want is obviously half of that, which is where this kind of formed in the first place, right? I guess you could go with like 182 to start, but ideally probably like 214 to 230. So, and you see how they're stalling, like if we measure this from maybe the exact low, do you see how like that's roughly around that 272.0608? So I think that obviously would have been a better area for us to break. And do you see how if they had triggered 230 points, that would have actually been a core to core move of 72. So 198 is probably where they're stalling now. That's crazy. You guys, look, 196.25. That is nuts. That's the exact same differential and range that they stalled here. 181.50 off closing price. Okay. Versus the 182.25. 196.25 versus to highs, current all-time highs, versus 198. Do you guys see that? So it's basically this. Look, 182, that's the minimum. 198. So the first time around, they stalled 182. 182 would have been closer to like 86, okay? 8650. That would have been top core ratio. And that's from this closing price to this low and this break, okay? Off here, if we measure, I was measuring off the actual close, but if you measure off the high, okay, it would have been a bit closer to here. That's probably why they kept stalling beneath 8.9. That's crazy. That's probably why they took out 8.9. If we measure off the 198, it's closer to, off highs, it's closer to that 72.06. Okay, this is, I'm measuring specifically off this 14th candle high close and then off this 15th low, okay? If we measure off here, 198 is closer to 72.02. So clearly there's some overhead there, right? Around the 72.01.02. If we measure off the low, they technically broke that 198 to 182 ratio. 182 point ratio, 198 point ratio, sorry, would have been around 7189.75. And that's the area that we broke when we cleared highs, if you guys remember. And then the 7180s is why they kind of kept stalling back there early in the week. So remember early in the week when they stalled 71.73 here on the 22nd? That was when they basically failed to break 182 point range. That's probably why they didn't trigger 71.88 that day. That's pretty cool, you guys, actually. So we know for a fact that we definitely have to get back above these points here. And then the 210 point ratios that we're talking about off the low to high, they're going to be around these spots too, like the 7200, 7206. Do you see what I'm saying? And then 230 points would be around our core ratios. So core ratios are also aligned with those 230 point breaks, which is the full ratio from that specific candle. 214 is more closely aligned with these neutral spots too, okay, off this candle's high and close. Off the lows, 214 is more aligned with 7206. So we know that there's a ton of confluence around 7206.08. So from a very, 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 very calculated format, triggering that on the 27th and 28th, like the 7202.06.08, do you see how that is what could get you these continued core breaks? And this is market holding above a closing ratio to a low ratio. So back in here, it was basically saying, don't take me back to March 31st, okay? I want to try pushing at least basically this bar right here, okay? Like this. Do you see that? Do you guys see what I'm trying to explain or no? Because this is a really calculated way of looking at the market in terms of like time and price, okay? But that's basically what the market's doing right now. So this staying above there is implying that they don't want to head back to this closing ratio here. That's why if we can stay within those 426 point ranges, which even if you trigger back to 70.24, you're still holding half that range on the closing price. Which is why I think these could be our ranges to kind of go forward from here. Off the low range, it's closer to, yeah, probably close to like 6, basically the zone, like 69.90, 69.88, especially if we went with like the 182, 198 point range, right? 182 to 190. They're probably like right around our 6966. 6966. 6977. So those could be like the core ratios back to like the 69, 71, 78, 81. I might have to put this in a separate report because this is more advanced, but that's basically what could trigger that kind of a break. Okay? 214 points is closer to like sustaining the zone. 230 is basically holding a neutral stance around 70.08, 70.10, so on and so forth. And this is off the full range lows versus open. Open is closer to basically holding core areas in the channel, so like 70.30s to 70.20, okay? Or just like the zone around 6988. If we look at this from an 82 point ratio, do you see that? 69.90, 88. So that's what could trigger that zone. And if they kind of just kept it above here, this is probably our safest bet, is holding above that channel. Whereas if they fully just kind of avoided this entirely, okay, that means that they would be obviously above there. So 70.11 has a lot of confluence off that, but I think to avoid that entirely, they would have to try keeping this, I guess, above half that range, which would be what? What's half that range? Like 91 points off the 182 and 99 points, and then off the 214 it's going to be obviously our core ratios like 107, 115, 110. And I think because from open to close last week they stalled 98 points, that's probably this. It's probably the 198. So that means that there's high odds of sustaining that close. 198 divided by 2 is 99, okay? And they hit about a 98 point ratio last week. So the goal could be, if you want to sustain half of the 198 to 214 range, you probably don't want to go much lower than this area here, which is right back to our neutral spots. So that could be some odds of maybe holding those neutral areas around 71.06, 71.11, 71.10, okay? Around the 103, 107 is going to be basically holding our core ranges, 71.20, 28. So that's actually very cool that those core ratios align with core ranges. That's really, really interesting. And that's what would basically keep odds in play of breaking. Do you see that? 117 point range breaks core off these 71.04, 02, whatever. So lots of support between basically where we stalled and our neutral zone. And they start expanding if they start breaking. And it's pretty obvious because if they break core ratios here, look, this is kind of crazy because core ratios are around these areas, which is 70-90 to 70-88. But if they fail the 132 point ranges, 128, those are failing core ratios, like back to 70-71, 68. And that's what could push those like wider ranges, okay? So that's from a ratio perspective. And basically holding this, okay, long story short, holding there means that they want to try to avoid going back here and they want to keep pushing 400 point ratios. Does that make sense? Because you're basically moving from here. Okay, so holding there right now means you want to try to keep pushing these ranges from here. Okay, and where you're currently stalling right now is off the midpoint ranges right here. So I hope from a price perspective, this makes sense. Why these areas sustaining this week would imply that they could get those much wider continuation breaks, or at the very least to, like at the very least, at least to get like the continuation off like open close. So off open close would be the 200 point ratios this week, okay? These areas here. Which is our, basically, it's the same thing as like 7,232, aka top of the zone. Okay? If you want to look at that from a base perspective. You can obviously go back and start measuring 256 point ratios if you want. That would be like 72.57. That's where you'd get that. If you want to measure 346, it's going to be closer to like 73.44. But the ratios we're working in right now, we're closer to these instead. Okay? And you can even see it coming into play based on where they stalled, where they took this. Even like when they broke here, look at that from this candle. Do you see that? Look, 199. Do you see? Like from open close, highs, lows, like where they were holding off this low. I would imagine that this is probably the 185, 180 break. This is the 420s. This is just to give you an idea of where there could be some mid overhead. And again, how you could look at this as like some support in here right now, okay? Off like some mid support. So this is another way of confirming that even off the structural breaks on the 13th and 14th. Do you guys see how there could be some support from those price points around those 182, which is around 7104, to 198, which is around 7110. And then the bigger breaks are like the 214. So holding 214 points is basically like holding the closing ratio from our 14th and 13th candles, okay? So if they hold 214 points, it basically means that they'd have to hold Friday's low. That is what could keep the bull scenario in play, I think, okay? Because that would be, you don't go back to retest lows. Does that make sense? So holding that, I think, gives you the highest probability. Or even holding core like 198, because that would be the same thing as this. So, but then you would have to basically get your base support is going to be around the 7150s, 7151 to 58. That makes sense from a logic perspective, because obviously if you don't want to go back there, then you'd have to hold like your means, right? So that makes total sense. that your 230 point ratios are above the means, and that your 214 are close to the 30s and 40s. Like, look, 3, 4, and then your 198 is close to your 7120s, and then your max is the 7104, 06, 10. And all of that is what basically keeps you in play for those 7,300 marks, if they don't want to take it sideways. It is very, very complex. I'm not going to pretend it's not, but if you really are someone that wants to learn range theory, this is a really great time to kind of practice that. So them holding where they're holding right now is implying that they basically are trying their best to keep this above that ratio. Do you see that? And specifically, see how it's going 132 points from here to 128 off these specific candles on the 15th, 14th, 16th. They're trying their best to not break down this range. Okay? Which is what would keep these odds in play. So overnight support for bulls to still keep odds relatively high for the 7206 reclaim and potentially 7220s and 30s this week would be technically, if they took it down to 5.8 and 5.2, that's probably okay, but they would absolutely have to hold that. Otherwise, that's going to trigger 7134 retest. We've got major support at 7122, 25, 28. And then market actually has odds of sustaining neutral ranges this week at 7104, 06, 7110, 7114. That would still hold the max threshold from those calculated ratios of like 214, 230, 198, and 182 points. And that could still give the odds of the 7206, 7214, 7220, 7232 retest. Holding this range in here around 7176, 7177, 7171, 7166 keeps odds in play for channel breaks to 724448 this week, and odds of getting 7258 to 66 and 71. That would be like a core to core hold. And from a ratio perspective, when measuring off those dates, it's basically the same thing as, well, if they hold here, okay, then they still have odds of pushing those 182, 198, do you see that? To 214 to 230 point ratios. That's how you could get basically core to core. And the 230 ratio off the April 15th close, which is, again, that calculated range that we just talked about. Okay, is, and that's off this closing price. These areas here are exactly 7,288. So that's actually pretty insane. And that would have to break basically the zone. Okay, I think that's enough math for you guys, but I'll get that summary off the stream, and then I'll have the report out probably in like the next hour or so. It's basically done. It's just some conditions I'm going to have for the week to start, but we're probably going to need more than 2 reports this week. So there's already one. This will be the second. I'll probably do a midweek and an end of week report, because it is a very important week for us, especially to see what kind of odds we get, because they could literally give us 7,300s before they give us 6,900s or 7050 retest. Does that make sense? So I want to make sure that we're on the right track for which scenario has the higher odds. Okay, I will catch up with you guys later this evening just to kind of see where we're at. So far right now, core holds mean they have odds to get back to the zone, and where the 7206 area is still going to, and 7208 is still going to be a massive overhead for us pre-Fed, and specifically by the